Let's welcome on board Devansh Jain, the ED at INOXGFL Group, joining us on the show as well. Devansh, hi, good to have you. Let's begin by discussing the earnings of INOX Wind as well as INOX Green, because both have shown a tremendous improvement on a year-on-year basis. For IWL, of course, it's the break-even that has happened at the cash PAT level. For green energy as well, it's the second consecutive quarter of profits. But the big question is, what about the growth trajectory going forward? Because on a low base right now, growth looks quite high. But for the coming year or so, what kind of numbers should we pencil in for revenue as well as profitability?
Hi, good afternoon. It's a pleasure to be back. Yes, it's been a fairly phenomenal quarter in terms of a turnaround after almost 5.5 years of pain in the sector. It's fairly enthusing to see that the whole company's turned around. INOX Wind obviously has become a cash-packed company in this quarter. In spite of this being a heavy monsoon quarter, we've grown at almost 250% compared to the same quarter of the last financial year. Even compared to the previous quarter of this financial year, we've grown significantly. And I think, as I've said in the past as well, every quarter should be better than the previous quarter for the next couple of quarters. So in Q1, we turned EBITDA positive. In Q2, of course, we've continued the momentum of increasing our EBITDA profitability and have become cash PAT positive. And God willing, Q3 and Q4 should only get better and better as we keep moving forward. I think the same holds true for INOX Green as well. Obviously, in that entity, it's a very straightforward annuity business. We've turned PAT positive there. I think every quarter should just keep getting better and better as the portfolio keeps increasing. Also, what we announced in INOX Green was the sale of our last 50 megawatt asset, which we owned in that entity, which we've divested for about 290 crores, which goes a long way towards paring down debt. We did mention in Q1 that over the next 12 to 15 months, our aim is to make this company, the consolidated wind business, net debt free. We started by making INOX Green net debt free. And hopefully, I think we're well on track to make INOX Wind net debt free prior to the time we've announced.
So you're on track for that net debt-free target also that you had laid out. But talk to me about the order book as well. Right now, it's looking quite healthy, close to around 1,300 megawatt. But what about the pipeline going forward as well? And do you have enough execution capabilities as well?
Look, I think we have a fairly large and robust order book. It's a mix of our 2 megawatt product and 3 megawatt product. We did mention our new 3 megawatt platform. Supply should kickstart in Q3, and I think we're well on track for that. Having said that, I think there are multiple public sector enterprise tenders out there. We've bidded in quite a few of them. There are a significant amount of CNI discussions and IPP discussions going on at this point in time. Gujarat and Rajasthan came out with a phenomenal state policies about a month ago, or maybe about 15, 20 days ago. We're in active discussion for a lot of deals. So I think in the coming days or weeks, you should be hearing a lot of order announcements at our end going into Q3 and Q4.
For all of those order announcements. But Devansh, there's also something that you talk about, the inorganic acquisition strategy for green energy specifically in the O&M business as well. And I see in the sector as well, there's a lot of consolidation opportunity. Talk to me about what could be the size of that, because on one end, of course, you're trying to delever your balance sheet. But what about these inorganic acquisitions?
From an INOX Green perspective, as I mentioned, given we've just divested Nani Vinani, it's become a net debt-free entity. Subject to these 3 or 4 months of, transfer issues for that SPV. Having said that, that's an annuity business. It just throws up cash. And we're looking at, we're acquiring O&M assets. There's about 9 gigawatts of play out there where players have gone bust over these 5 or 6 years. So you've got almost 9 gigawatts of assets, which are being serviced primarily by unorganized players. And I think that gives us a great opportunity to move in and acquire a big chunk of that. Those are not capex heavy. Those are not something which requires hundreds and hundreds of crores. So I think we acquired a company about 7 or 8 months ago, which was India's third largest O&M service provider called iFox. It had a portfolio of about 230 megawatts. We're continuously scaling that up. And I think that's really going to come in from internal accruals. There's no question of taking over any entity with debt or spending money by way of tying up debt. So I think Green is really going to be an annuity free cash flow business, giving out dividends eventually and really using its free cash flows to acquire these distressed O&M assets in the market.
Okay, thanks, Devansh. We'll let you go on that note. Appreciate you making time for us. But just